Aloha and welcome back to the week to come. This week we're going to be going over basically all of the overall macro, and we're going to continue on from Friday. Futures just opened up. We're going to talk about that in just a second. But I'm going to let you know now it's not going to be a pretty week, most likely, or we're going to get some sort of bull trap rally. Also, we're going to get into some of the overall projections and some of the over the weekend updates that I saw and that I think you'll find interesting as well. Some of the news that came in. Of course, we're going to be talking about a couple of truth whatever posts from President Trump. That's gonna. It's not adding to any kind of de-escalation. I'm gonna just let you know now. And then we're gonna go into what the futures look like, as well as what Kalshi has projected for the rest of the year. Locally, Hawaii's still dealing with a lot of damage from the flooding here on the island, and on a few other islands there's still a lot of storm damage happening. North Shore underwater, rivers all over Maui underwater. I'm seeing an elderly woman is now missing. So please just be safe, turn around, don't drown. But let's get into something more engaging and less sad. We're going to talk about the markets. All right, let's move on over. Let's see. Here we go. So we're going to start off with crude oil futures. It opened up to, let's see, here. So it opened up the day over 100, and now it's trading down at 99 over the first hour. We'll get some more candles here so we can kind of see some initial price action. Okay. All right, awesome. So as you can see, we'll just extend everything here. After all of the weekend news and Trump threatening to bomb Iran's power supplies if they don't open up the strait. And then also I'm seeing some funny animations from the Iran media that's pretty threatening to our crude oil ships going through the Strait of Hormuz. So this is going to be the overall theme for the next, who knows, few months at least. So we're going to start off by looking at the crude oil futures. It is not going to come down anytime soon. I'm not seeing any stabilization happening anytime soon as well. So from what I can tell here on the charts, I'm going to back up a bit. It's going to get a little bit wonky. Here, I'm just going to extend it to the 1-day candle so we can take a look at it from a bigger end. Here we go. All right, so I got the Fibonacci retracement lines here from the recent high to the most recent low, and it seems like we're inside of this 50% area here, right? So it did its job. It retraced back. So now that it's retracing back, we can kind of see where it's going to collect. And as you can tell, the momentum is still upwards. The theme and the sentiment is still pretty positive as far as this going up, right? So we can expect more collecting around here, and we're probably going to test this again here, right? Or who knows, we could even test a higher mark and then recorrect somewhere in this range here. So keep your eyes open. Like I said, locally, we're getting $6 a gallon here in Waimea town or Kamuela, depending on how you want to go at it. It's Waimea for long, Kamuela if you're trying to post stuff to the post office. This isn't pretty for the overall market as a whole. As you can tell, here we'll move over to the S&P micro futures. And I mean, that's obvious, right? So it's broken that trend line that I drew earlier, and now it's making a new bottom. So I'm gonna just, right, so that is now definitely the trend we're in, right? For sure, downward trend channel. Now, from here, like I'm not gonna, like I wouldn't say start buying puts over here per se, right? I'm not a financial advisor, but this is kind of an area where it's most likely to test a bit and then recorrect, right? It's not, everything's not a downward fall, right? We're going to get something that corrects it a little bit. Even through this overall downward fall, we still got some up candles, right? So wait for it to kind of hit this top area and then start putting your puts on. Just because it would be a lot cheaper on the puts when the markets are thinking it's going to go up, right? So I'm going to zoom out on this first as well, because we're starting to get into that area I already drew, right? This kind of like oh snap area. So now this is that kind of support that we're looking at next, which is 6,400. Okay, we don't know when it gets there, but it's projected to get there. Now we're gonna check the We're gonna check here, S&P. I want to see the low. How high? How low? Okay, here we go. So you can see we got a 95% chance of getting to 6,400 or below, right? That's this red line. That is a 94% chance of getting below this, okay? So I'm going to move this box down to here, roughly about here, because that's kind of where we're 94% chance of hitting, right? If we're looking at the prediction markets, because this is what they're for, in addition to being able to hedge your current positions, it's for information. Like, people have put their money behind these ideas and these trades, and if you're putting money behind something, it's usually researched, right? This is skin in the game kind of data, and I'm not liking this, but I'm also really appreciative that this is something that we can look at, right? So 95% chance for getting below 6,400, right? So that's this green box here. We have a 84% chance of getting below 6,300, right? So let's get another line going. 63, we're making it red because that's the direction we're thinking about, right? Down. 63, not 61, 62, 60, ballpark here. All right, so there's that 6,300 at 80% chance, okay, that we get below this line. Now, what else we got? We got a 74% chance of getting below 6,200. Let's do that one. Okay, another line. That is here. So if we get anywhere near just a second, there is no support on the chart if we backtest it, right? This is a non-support area. So if we break through this 63, we are definitely going back to the last major support, which is sort of in this area here. All right, so the predictions have that 6,200, right? 6,100. So this is a pretty high percentage now, right? If we get anywhere near there, 60, right? Because this is 6,000. Let's get a line. This is 6,000. Sort of. Right about here. That is, this right here is a 50-50 chance right now. That is a coin flip odds of getting down to 6,000. Higher than a, okay, so out of every 100 coins you would flip, 59 of them would be heads per se. That's how we're looking at it here. So the odds are not in our favor. It's a coin flip to get to below 5,900, right? So that is a definite falling knife of a concept. Or a trajectory, excuse me, not concept. Here we go. All right, 50. Oh, right here. Close enough. Boom. Right, so over the next coming months, we're going to be watching these 5 lines, right? Because if It bounces off of here, we're okay, but the overall projections are not good for us right now, right? So now let's look at the upside. I'm not looking at tomorrow's prices because that's way too violent. The VIX is too high, right? I want to look at the overall year prices. Like, we only have a 50-50 chance of finishing the year positive, guys. All right, here we go, high. Okay, so the good part is we got a decent chance of coming back to this 72 or above 70 handle, or 7,000 handle, to the 72 handle. But it's more likely that we're going to go down first before we go up. And look at these odds here, right? It's got a better chance. Okay, I don't know why they're pricing these in right here. These are wonky. Right, you figure these are mispriced, because if it has a lower chance of getting above here, then it should have an even lower chance, right, if you were to scale up, of getting towards here. Oh, man. Interesting. All right. So the overall market sentiment is not great. I'll get more news as I can coming in. I've got some that we're going to bring up in a second on the poly market, Kalshi side. It's that we got something interesting recently, or the last few days, something called the Situation Room. So let's look into that real fast. I'm going to close this for a second. All right. Hi. So I'm going to get something up here on the screen real fast, if you just bear with me. But while I'm searching for that, I'm hoping you don't hear my dog barking in the background. He's being quite incessant, so I'm just going to mute this for a second, okay? Okay. All right, we're going to start here on the Kalshi Twitter. I'm going to move this over for you, our Kalshi X page. So let's look at the more recent. Oh, yeah. So officially at this point, the billion-dollar bracket, perfect bracket, is unfortunately no more. As of yesterday, there was only 2 people left who had a perfect bracket, anonymous people. And at this point, I don't think there are any more. But they're still giving away $1 million prizes for top brackets, so keep your eyes out for that. All right, so as of 13 minutes ago, like I said, oil prices surged to above $100 on the futures. We saw that red candle. Here, 75% chance Bitcoin falls below 60,000, right? So keep your eyes open for that. As a Robinhood shareholder, that is something I have to look for because of the beta attachment, right? They correlate as far as chart movement goes. So we have to keep an eye on that. Because if this is going to get below 60K, then I'm imagining that Robinhood will probably get below 68K as well. So I'm going to start positioning myself in that way, start putting on some true blue hedging. Here we go. What else we got? Okay, we got 90% chance SpaceX announces IPO this year. That wouldn't be pretty. It's not the most bullish year as far as the outlooks look so far. All right, and then is there anything else? Okay, so that was from yesterday. Okay, let's see what else we got here. Let's check some notifications. Okay. All right, excuse the dog out there. Okay. So here we go. We got Amit posting up on the futures. Let's see what we looks like here. Okay, so it's obviously not a pretty picture. Now, last Sunday, the futures opened up green, and then throttled out throughout the week. So we might just be a day behind, right? So don't necessarily start just buying puts, because the puts are going to be expensive, or any downside trajectory positions will be more expensive because of the initial downfall. So if I was well, what I'm most likely going to do is wait for a green candle of a day, or a red or a rally day, and then look for pricing, because I'm not going to fight this overall trend. There's no sense. That's just gambling, because there's no one catalyst at this point that will save the market from the momentum it's in. You have to kind of imagine that banks, hedge funds, they're all looking for ways to protect their billions of dollars, right? We got chump change compared to these people, so we have to go with the way they're going to most likely move the markets. We can think about them as market makers or whatever, but they know they know their shizzle, and they know how to project the future. And you might as well at least try to protect yourself like they're trying to protect themselves as well. All right, let's see what else we got for recent updates. I know Wolf always has great stuff coming up as soon as the day opens. So let's see what we got here from Wolf Financial. Please follow them if you're not already. They have a suite of traders, different types of sectors, from defense to Bitcoin. This is the umbrella that they're under. They have millions, 50 million under assets under management. Their portfolio, robo portfolio, and trading portfolios are up on the year, so please check them out. But let's see what we got here. Talking about Warren Buffett. Okay, so anytime you start to see Warren Buffett quotes, it's a good time to start considering thinking long, thinking hedging, thinking like you have 5 to 10 more zeros on your portfolio, right? Think big, because it helps you allocate and stress accurately. They have a lot of stuff coming up in the week, so because I can never catch all of it, I catch whatever I can as it goes throughout the week, and I'm always going to get up-to-date information that I'll do my best to bring to you, because whatever matters local is what I'm going to try to digest out of these internet news updates, because there are so many. Okay, so nothing big there. Awesome. Let's go back here. How are the futures doing at the moment? Okay, let's give it a 15-minute candle. We'll go down to where it is. Okay, so obviously big gap down, boom, to that white line I drew. And now we're getting a bit of a, I don't want to say rally, but if we were to give it the usual retracement, right? So from peak to trough, hate it, but it works. Here we go. Okay, so we should expect from this initial gap down, we're gonna retrace to at least here, probably surpass it based on momentum here, right? So I don't know what tomorrow's going to look like. This is the 15-minute candle, right? So it's not a long candle. It's not a candle that, or not a time range that I would use to project trends, but at least I can see the initial movement, because you really want to look at an opening range test, sort of, because that's what we're looking at. Okay, so I'm going to back up a little bit to see if I can find last week Sunday, which is about a week ago, which was, right, what are we at? Today is the 22nd. 7 days ago was the here, let's do some searching. Because where was a week ago? Okay, we're at 10. Where's the 10th? Nope, not 10th. Hello, 15th. Here. Okay, so this was the 15th, right, as soon as it started. And then, so what I'm trying to do is get a rough gap estimate. Excuse my dog. My family is outside, so he wants to go play. Okay, so that's the 17th. Back to what we're doing here, which is the 15th. Okay. From 13, 15. Okay, here's that gap up. Excuse the time frame it took to find that. All right. Okay. So as you can see, what we did after that range, right? It gapped up on the day, tried for a few days, went up to this kind of test area here, and then came back down into its range, and then left it. Right. So if we're going to project some of that, right? We started off the day down here. Maybe we get down here, we retest, and then it comes back. So throughout the week, I imagine it's going to dip or rally first few days, dip down to about here, rally up to about midway, and then continue on into this box. Okay, so I would anticipate, based on the momentum we had from last week, right, because these Fibonacci retracement lines caught it up and then came back into its original, right, poof, started here, and then couldn't handle it a couple times, and then broke down. Right, so we need to look at this opening candle, as confusing as it looks right now. Reduce the time frame and zoom in a bit. So we need to expect that it will most likely try to leave, test this white line here, which would probably be a good time to purchase your puts, and then it's going to come back and then break down again. Okay, so we just need to watch, wait for the rally, look for another 66 handle to start looking at your puts, because I don't think it can make it back through that, because that's the massive support that it already broke through. Was this line? You can see, right? It already broke through this, tried, come back away from it, and just couldn't, and then just couldn't and couldn't. So I can see it trying to rally a bit, right? Sell the rallies, come back to this, maybe break it for like a smidge, and then it's going to come back down into its trading range and then probably break through down here. So if we're looking at the longer, oopsie, okay, lock. If we're looking at the longer outlook, right, so it's going to stay in this range and then come down into here and then into here, right? It's going to be inside of this box and then down into here, right? These are all based on the Fibonacci sequence, and the likelihood is pretty high if you're a Fibonacci person. I tend to use the Fibonacci as a back test first, see if the price action actually correlates, and then utilize it as a trading the future, or trying to predict what the market's going to do. This is not necessarily a hard prediction right now. I'm going to take off all of this stuff just so it's a little bit easier. We'll auto scale. It's not pretty right now if you're long, and anybody who's bullish on the stock market should be long, but it's just not going to be a time. Look, it's trading below its moving averages. Here's that 1 hour chart. Okay, you can see, like, so I know we've been talking about the S&P 500 a lot, but that is a big global indicator and national indicator, other than the crude oil futures. And you can see now we're about here, right? It's not pretty. It broke this test area, right? So this is most likely going to be another test area, right? We tested it here, broke through, tested it here. So I can see us trying to retrace back because reversion to the means is a strong universal rule, right? Things leave an average, come back to an average. You can even think about it on a personal standpoint. Your emotions go high, they go low, they come back to wherever your baseline is. So if you can maintain a good baseline or have a baseline outlook, you'll know that your trades will tend to come back to those baselines. The longer outlook ones look a little bit better. Let's increase the time frame. Scale back. Right, so this is the 1 day candles. It's obviously severely broken through this long-term trade line of, this is probably the 200 or one. I used the 150 days, so this is probably the 150 or the 200 day. But it is just overall finished, and you can see it tends to be above its trading averages, and that's it. So we're getting into a correction range. Turn these back on. Right, so remember these lines, right? These are the statistical areas that we're gonna be hitting this by the end of the year. 90, 96% chance, 92% chance, 86% chance, 69% chance, 54% chance. Okay, so keep your eyes open. I don't want this to happen. I can't control it if it does. But what you can control is your ability to adapt and change direction. Right? We're not trying to beat the odds here. We're trying to protect ourselves from the odds coming true. And the odds don't, like, I mean, let's look at tomorrow. Why not? I mean, I don't tend to trade this short time frame. What do we got? Okay, so we got a high chance it's not going to just fall through the floor tomorrow. That's great. But here are the, okay, it's not going to be above 66. It's not going to be above 657. Not most likely above 665. Okay, so where is that on the current futures outlook? 665. Okay, so it's most likely going to stay within its opening range, right? Because 665 is at the bottom of this white line down here. We'll reduce the candle size so it doesn't look ridiculous. Okay, right, so just look at the top bottom. So tomorrow, it's not necessarily going to break through this, like the percentage is high that it's not going to break through 65. So it's still in that likelihood that tomorrow we're actually going to rally up and we're going to get a tiny bull trap. Like a big bull trap is if it retraced throughout the week to back into here, which it can do. I'm projecting it probably will, because the markets love tricking you, huh? But it never wants to do what you want it to do, right? So anticipate that if you want it to go up, it's not going to. If you want it to go down, it's probably not going to. So I think it'll test this range here, this white line, sometime in the week. That's what I'm looking for as far as put buying, because that might be the highest high it gets for a while. Okay, so that's the lowest price your puts will be for a while. All right. Here we go. Now, as we bring this episode to a close, remember that the oil prices are elevated. The futures tested over 100 already today. Locally, we're getting $6 a barrel in my town here. We're seeing state averages above $4 at this point per a gallon for regular. We could be seeing $8 a gallon for diesel probably in town. So if you can, if you have to drive less, drive. If you can drive less, drive less. If you have to drive more, maybe consider throttling back on your pleasure buying, right? Whatever you do for fun, and then reallocate that into positioning against the overall price increases, right? So a place like hedging your price increases is not hard anymore, right? Right? Gas prices, boom. Let's see what we got. Okay, I'll bring it to you here. Right, so now we can, right? So let's just go for the month. It's a shorter position, right? Maybe it's over, but it's already projecting that the prices will go up. You can see that, right? So let's say, right, so about here, right? This is the sort of trading range that gives you a decent chance of hedging your gas prices, right? So it's got a 94% chance. So that's a 6% increase on your position, because the chances are extremely high, and it's still high. Right here is 7 out of 10 that the prices are going to be above $4.15 nationally by the end in this month, or by the end of this month, right? So this is basically getting $70 bills for 75 cents. Now, if we turn it into a gas price hedge, your gas prices have gone up, who knows? Like for us, it's maybe $1, right? So I would have to, per gallon, get 4 of these contracts that will end up equating a full $1 of increase per gallon I buy, right? So if I have a 12-gallon tank, I'm gonna need to buy 12 times 4, 36 contracts of this, that should compensate for the overall price increase, right? You get a 25% increase, because that's roughly what we're getting, is a 25% increase on gas prices in the short term. So this is a short-term trade. Now, this is a pretty high chance, but it's closer to 50-50. So I'd stay in here and sort of price it in here, because it's easy. You got a quarter, right? So if your gas prices went up 50 cents to $1, then you need 4 of these contracts to price, or to close at a yes, to compensate that $1 of increased price you paid in gas. So it depends on how much gas you use per week, and how much investment you'd have to put towards hedging your increase in gas price for you and your family. Right? This is just an idea, right? This is just an educational way of thinking about prediction markets to protect your output, protect your price increases. This is a great way to do it because it's simple. And you don't have to be a technical analyst. You don't have to be a geopolitical analyst. You don't have to be necessarily smart, because you see it already happening. The de-escalation isn't happening. So I would say it would be a good time to consider hedging against your inevitable increase in pricing, right? It's not hoping for the worst. It's hoping for the best, but planning for the absolute worst. And who knows what the absolute worst is, because I'm a hopeful person, so I can't necessarily imagine the absolute worst. But the short time worst is, hey, we get $10 a gallon here in town for local gas, which would be a $6 or a $4 increase from where we're currently at. And that would be a about $6 increase from the beginning of March, which is a lot for gas to go up in a month per gallon. So now I'm hedging already at the moment. I started earlier in the month to try to protect myself against some of the inevitable increases. But I may have to scale up, right? Who knows what this is going to do? Now that we're moving towards correction and bear market range, we have to consider adapting, right? We're not trying to beat the markets. We're not trying to outdo the markets right now. We're not in a bullish bull market. We're sort of in a neutral to bearish market, and I'm just doing informed and protected. I want the best for everybody who sees this, and this information is definitely helping me to know where the money's flowing, right? Money, I'm hearing this a lot from a lot of people, but the quote's been popular lately. Money goes where it's cared about the most. I might be botching that, but it resonates, because if things are cared about more, the money goes there, right? Because you know the money will be taken care of, right? It's a psychological thing. Even for you, when you care about your money, it tends to do better. Know what your savings account yield is. Know what your retirement or what is in your retirement fund. Know what's in your 401k. I'm not saying turn it into a hobby. I'm just saying know what it is. So when you ask yourself, hey, is what I already own going to do better or worse right now or in the future? We're not looking to teach you how to be a trader. It takes a lot of time to do what I do, 10, 12 hours a day, at least just doing some reading, right? I mean, keeping your ear on the news, keeping your eyes on what could be happening. So just incorporating that is hard to do it the way I do it. So I want you guys to keep a smaller outlook and just protect the one thing that's going to cost you the most money in the coming months is gas and energy prices. Your electric prices are gonna go up because gas prices go up because that's how we make electricity still, right? So just keep your eyes open for that, and rather than crying and complaining, just try to protect yourself first, and then you get to cry about protecting yourself instead, being able to have this nugget of money that's now increasing because of the overall market decreasing, right? There's always a bull market somewhere. Michael Obasina would say that multiple times through his tenure on The Week That Was by Robinhood, but it's still something I think about. Like no matter what, there's a bull market somewhere. There's somewhere to be making money. Your job is to adapt and transition into another type of position. Now, if you just want to hold and sit, by all means, hold and sit. But it's important for you to stay ahead if you're going to be a swing trader, an active trader, like a lot of us do. As you can see, I'm out here trying to make some good content for people so that you have a place to go to find some sort of calm thought process. I'm not going to push panic. I'm not a panicky person by nature. Native Hawaiians don't panic. We adapt. We have known for generations that we're in a small ecosystem of an island, and Mother Nature and the ocean and the bigger forces that exist will take hold of a small place. And we're resilient, we're strong, we're fearless by nature. Now that does come with its caveats. Being fearless has a major downside. You tend to run sometimes blindly and headfirst into something that you could have prevented by just waiting for a second. Right, so I'm learning how to be sort of, I don't want to say fearful, but process my fearlessness differently. Because like I said in multiple episodes, and I will continue to say this, I find money a bit trivial until it's put to action, right? It doesn't matter if it's sitting there, but if you have a goal for that income and something that can push you forward in life, then that's what the money's for. Until then, it's just trivial ones and zeros that you're using to push your imagination or push your projections out into the future. Like, I can use this money for that one day, but is that day gonna come? Maybe. So take a little bit of those profits that you make and then try to enjoy your days now, right? Catastrophes happen. I want you to enjoy your life, but not overextend your finances. This is going to be a great opportunity for cheap buying of your favorite companies. So right now, I wouldn't say this week is a perfect week. We have not found anything remotely close to a stabilization or a bottom. The S&P 500 had that kind of between 7,000 and 6,500, right? It was kind of trading in that range for a while. And then when it finally broke down under that range, then we're starting to get a more steep downtrend. So until we find more of this again, wait. Right? There's no support yet. We have no de-escalation yet. Right now is a good time to maybe wait for a rally of some sort and do your cash secured puts. or do your covered calls, right? More likely covered calls up here. Cash secured puts when we find that support, right? A long-term, maybe a couple weeks where it trades sideways is what we're looking for. Because 1 or 2 days of this is not support. That is a trap. Okay? Bull traps happen. If you don't know what a bull trap is, it's when it's been coming down and all of a sudden you get a nice green candle, your hope comes up and you're like, we're back. 9 out of 10 times I said we're back, we are not. So I don't even say that anymore. Because we are not back. There's no support. But opportunities are coming for you to pick up positions that was overpriced for you and is going to be cheaper. That is my overall optimistic projection for what's coming up soon, is look for opportunities to purchase when you see your favorite stock or ETF kind of trading sideways. And look at the S&P 500 and make sure it's also found some sort of support. Like I brought up earlier in the episode, Kalshi and the Kalshi traders have us projected more towards a bearish area of 6,000. Okay? As always, mahalo. Farewell, be safe, turn around, don't drown, a hui ho, and I'll see you on the porch.